Well, the 10-year bond yield has fallen below 2% for the first time since 2016. 1.97% is now the interest rate at which big institutional investors are prepared to lend money to the Australian government for 10 years. Now, the fact that it's fallen from 2.6 to less than 2% means those investors must think inflation will be less than 2% for the next 10 years, which means they're very pessimistic about the Australian economy. And the really telling chart is the difference between what the US government pays for its 10-year money and what the Australian government pays, shown on this chart, which is kind of amazing. Our government has always had to pay more for its debt than the mighty American government, but not now. It's not about relative safety or prestige, but relative inflation, which is expected to be lower here than in the US because growth is expected to be lower. The Aussie dollar held its own in the face of that rather momentous event in the bond market, but it went up against the pound, which fell after the British Parliament once again knocked back the PM. The US market was mixed. The broad index went up, but the Dow Jones fell, dragged down by Boeing, diving another 6.5%. The local share market eased a bit. Sigma Health directors knocked back a takeover offer and the punters tore up their betting slips, while among the biggest falls were Ingham's and AMP, and Appen and Coles went up. And finally, this chart from yesterday's speech by Reserve Bank Governor Guy Debelle about climate change shows the cost of electricity from solar and wind against the national average wholesale price. Now, as you can see, they're both now cheaper than the average, which means coal. So we can stop subsidising it now and perhaps stop arguing about it even. And that's finance.